Maybe Kevin Green's with us to think about Nvidia. All right, KG, this is what it's all about. This is why we wake up in the morning. This is why we're all here in the year of our Lord 2024 to watch the singularity built by Nvidia. What's up, man?
Yeah, we're going to be focusing on the forecast moving forward. Obviously, that's been the driver for this stock over the last couple of quarters. And even though we might see a nice little beat on both the top and bottom line, I think it's that backlog or the order backlog that's going to be the key area here that the market's going to be focusing on here. We actually have the revenue projections right now sitting at $20.18 billion. That would be a 235% increase around there, increase on a year-over-year basis. And the adjusted earnings per share estimate is sitting at $4.52, over 400% increase on a year-over-year basis. And why is that the case here, Oliver? Obviously, it's going to be data centers. It's been the GPUs. We talk about it literally every single day here. And the data center business now drives around 80% of its total revenue. If you look at fiscal year 2024 or 2022 in Q4, it was only about 42%. So even if the other segments are weak, data center is what's going to drive the growth here in the near term. We also have Loop Capital initiating coverage on the stock here with a buy rating with a new price target of $1,200 here. They do believe that we're at the front end of a 3 to 5 year graphic processing unit cycle here, and they believe that there's still material upside when it comes to the earnings estimates for Nvidia for 2024 and 2025. They do acknowledge that competition's coming in this space, but they believe that the big players, the big customers for Nvidia are going to stick with them and continue to buy these chips at a healthy clip. And that's why we continue to see a lot of upside movement when it comes to the stock, a lot of speculation coming to the stock here. And if it is able to deliver, maybe we can sustain this rally in the near term.
All right. Next week is shaping up to be the biggest of the year. I mean, I don't think that it's even up for dispute. We've got two hot inflation prints behind us that's completely changed the direction of the bond market again, out of favor for the bulls. We've got the dollar firmed up. We've pushed back the rate cuts. Market is basically thinking none of that matters because of this stock and everything it represents across this entire trade. Every time there's been this kind of pressure on them for earnings, they have delivered and then some. So SMCI finally cracking today too. SMCI's had a $200 move basically in the last half hour. I don't know if you saw that, Kevin. I mean, look, it's gone up, an absurd amount. But yesterday's fade in tech, this morning's too, the fact that people were trying to buy the Russell instead, it seems like the market has gone, all right, well, we're breathing for a bit on some of the tech, so then let's try and grab the small cap stuff. So maybe we're taking a little breather here to let us reset into Nvidia.
That might be the case. I mean, we still have some time left to go in the rest of this session here, Oliver. When you're talking about SMCI, I mean, I was actually looking at the options market, looking at the $600 puts, and they were going for like $33 just for today's expiration. So the IV is just absolutely enormous right now when it comes to not only that stock, but also other semiconductor companies here. The IWM, and if you're looking at small caps, that's going to be very tough because they are dependent on rates, but there has been some bottom feeding there. So you want to continue to see some positive inflows, and Nvidia will drive that trend if they are able to perform. Some of these other smaller companies that might not be so small anymore, SMCI, ARM, things of that nature, could continue to sustain their rallies for the most part. But when you see some of these parabolic moves in a lot of these stocks, Oliver, I mean, you've seen this in the past. They usually tend to fade in the long term. Especially if they don't have that much cash on hand, or if they are very dependent on maybe one or two customers or one or two suppliers.
Okay. Look, it seems to me like when your chart looks like Nvidia's, you're going to have to beat on every category. But, if this is a real revolution of tech, which it seems like it is, then, even just hitting the expectations, which are so lofty at this point, I don't know, maybe it would be enough. What do you think as we try and figure out kind of what standard has to be held here for this earnings?
Yeah, once again, it's going to have to be that guidance. I don't think the market is really pricing in the fact that they might miss on both the top or bottom line here. And I would suspect that they probably would not. But if they have guidance and they continue to increase the revenue guide by $2 billion, $3 billion, I think that's what the street really wants to get. But I kind of talk about this. I have a 6-year-old son, right? So if I give him candy every day, he's going to be happy. If I stop giving him candy for just one day, he's going to be upset. And so that's kind of where the market's at right now. If they guide a little bit more conservatively, then I think the market might take it out on the stock. We just don't know yet. And there's a lot of analysts that continue to move their price targets up. Trust me, it's not just based on fundamentals. They're following the price action as well. They don't want to be too behind the curve, but that can also have an opposite effect down the road here. So I think just taking it one step at a time, if you do have a position, obviously leveraging some risk management strategies might be a prudent thing to be able to do here, and kind of just see if they're going to be able to maintain this growth rate. I mean, if you're able to have this growth rate of 20% CAGR on a year-over-year basis, 20 to 50% CAGR on a year-over-year basis, this stock is on the trajectory of being the number one market cap here. If it's able to do that, I'm just not sure if that's going to be sustainable.
Yeah, the amount of market cap this company has accumulated is astonishing and really unprecedented in the speed of the move. Just within the year-to-date period, with the move from $500 to $750. I mean, that's just incredible. The RSI has been hanging out into overbought territory since basically the year began, since like the first week of January. I mean, to just stay there, to get up there and stay there. I mean, that's kind of the point of looking at RSIs and assets, to try and catch when the momentum's super hot. But I mean, even by the standards of some of the stuff we've seen the last couple of years, I mean, this is somewhat unparalleled.
Yeah. So when you're looking at RSI, just one thing to also note too, the RSI is really good for like range bound stocks to be able to try to find tops or try to find a situation where it might be bottoming here. So what you want to see for the RSI is actually a divergence. So RSI going down, but prices continuing to go up. That's where you see a loss of momentum, and you can have that complemented by MACD or a CCI type of indicator here. So when you have a trending market, especially one that's moving this fast, RSI is really going to give you a lot of false signals, unfortunately. And you kind of have to just look at the price action and volume. Once you start seeing volume drop and prices continue to decline, that's when you kind of know that it's losing steam. So going back to the basics of just technical analysis and kind of throwing away some of the other technical indicators that we know and love. Unfortunately, it's just going to be the case for this stock as well as some of the other ones that have run considerably.
Okay, all right. Good analysis. Good reminder here on the technicals. Nice work. Kevin Green, thank you very much, sir.